Well, student loans are a very important topic these days in our country, and student loans are also very important when you go to buy a home, especially if your student loans are in deferment. You, as many of them are, or maybe all of them, I guess, have been for the last couple of years, you tend to forget that those are there or that those balances are there. But guess what? That student loan balance is going to show up on your credit report, whether there's a payment due on it or not. The other thing that's important here is that it can impact, even if you're not making payments on it right now, on the student loan right now, it can impact the amount of money that you can borrow to purchase a home. Well, why is that? Depending on what type of loan you're doing, each one of the agency investors, and when I say agency investors, I'm talking about doing a conventional loan, it would be either Fannie Mae or Freddie Mac. If you're doing one of the government programs, you've got FHA, VA, or USDA. They all have their guidelines around everything to do with the loan process, but they have specific guidelines around student loans and even specific guidelines around student loans that are in deferment. So for instance, let's take Fannie Mae. Let's say you have a $30,000 student loan balance. It's in deferment. So on the credit report, it's going to show as a $30,000 balance. The monthly payment is going to show as zero. But because it's in deferment, Fannie Mae knows that at some point those payments are going to start again, and they make the lender calculate or include a payment equal to 1% of the loan balance in with the borrower's debt ratio calculation. So what's 1% of $30,000? That's $300. Now, in almost every case, we all know that your monthly payment on a $30,000 student loan balance is probably not going to be $300. It's probably going to be far less than that because the payment calculations on those are pretty lenient. But nevertheless, Fannie Mae makes the lender include that $300 payment in with that calculation. Now, most of the other agencies are a little bit more lenient. For instance, if it's Freddie Mac, they're going to make the lender include 1/2 of 1%, so $150 on that $30,000 balance. Same thing with FHA and with USDA. Now, VA looks at it a little bit differently. If you can prove to them that you're not going to have to be making a payment on this for any time in the next 12 months, if you have some documentation, written evidence to show that there's not going to be a payment due for at least 12 months out, the payment doesn't have to be included in there. If you do have to include the payment, then they're going to take 5% of that balance, but divided by 12. So, 5% on our $30,000 balance, that would be $1,500 divided by 12, which is far less than the $300 or even the $150 a month. So it's pretty lenient as well. And that's kind of how student loans are looked at. So if you have specific questions on your student loans or would like to take a look at your situation, see if you could be pre-qualified with the student loans you have, please feel free to reach out and I'll be glad to help you in any way I can. Thank you for watching. We'll see you soon.